Welcome back to Investing with Confidence. I am your host, Joshua David. We're having a good time in studio talking about stocks. We're also talking about options, futures, forex, the leveraged asset classes that the smart money is using. Also, don't forget to subscribe to the podcast wherever you listen to podcasts, but also the Investing with Confidence YouTube show. So, Al, as we get into this third segment here, we've talked a lot about the leveraged assets. We talked about futures. Great opportunity there. Forex, a phenomenal opportunity there because they have leverage. I think we actually forgot to talk about this in the last segment. They're open 24 hours a day, which
Yep,
means
I think we did, but that doesn't hurt to mention it again.
well, I got that memory. It's pretty short, but let's reiterate that these
Yeah.
markets being open 24 hours a day, that allows investors or the public to trade them in the evening. So say
Right.
think if people work during the day, the opportunity is actually there. The stock market, it's only open 6.5 hours a
Sure.
day. You're kind of stuck to those daytime hours. So as I ended the last segment, I wanted to continue the discussion about leverage, how great it is. But you have to protect yourself. You have to protect your investment because you do have that leverage. Talk about some of those different techniques that investors or traders may be able to use to protect their positions.
Yeah, no matter what you are trading or investing, what your style is, or what the asset you use, the number one thing that you should consider is protection, risk management. Because to be honest, there is risk in anything that you do, whether it's in the financial markets or just living your life. I mean, every time you cross the street, there is the possibility there's going to be a car, a bus, a motorcycle, low flying airplane, something that you don't want to encounter while you're crossing the street.
A
So
low
you look
flying airplane.
well.
Did
I
that
just
really just happen?
okay. I'm just maybe I stretched things a bit there. Hey, it's possible. Is it not
It's
possible?
possible.
All
It is
right.
possible.
Yeah, we have to cover all possibilities.
There you
But
go.
the point is, you look both directions. You make sure nothing is coming that could cause harm to you before you cross the street. When you're trading in the markets, understand what all of the risks are, and then you manage that. It's just like you manage a profit. You should be managing that too. But how do you control that part of the trade? Number one, I mentioned in that first segment what Warren Buffett said about controlling emotions. You have a foundation that you use, a good, strong foundational strategy, but then you keep your emotions from really impacting negatively that foundation. And that's what we want to help you control with a plan. That plan should follow a set of rules that you follow. It has to be something that takes your thinking as much as possible out of it, because that's what's going to get you in trouble. So it's a set of rules you follow. And basically, it's the same rules for every trade that you do, every investment that you do. You have to go through these steps that are a set of rules you follow. That helps to control the emotional part of it. And then also, with the proper identification of that supply and demand imbalance, that is where you're going to have the lowest risk entry or exit point. And that's important too. We talk about price as being the most important thing. And most of you, if you go into a broker's office, financial advisor's office with whatever the amount of money is you have, they're going to say, let's get you in the market right away because it's time in the market that's important. What really is important is where you enter, the price that you enter,
The
because
price.
that determines the quality, the profit potential you have, and the quality of the protection that you have. So that's very important. So that's another way of kind of reducing the risk. The size of the trade you do, all those things are important. But the number one thing that we have our students do, we have now a trading platform that is available to our students called Click. The number one thing that it asks you to do to kind of customize it for you is to put in the amount of money you are willing to risk on any individual trade. Maybe it's $50, maybe it's $100, depending on how much you have. It could be 200, 300, but you choose that. That means even with these leveraged assets where you may be controlling an investment that has a value of $100,000 or $50,000, your risk still is limited. In this Click platform, this trading analysis platform is going to tell you, hey, if you are putting a trade together or trying to put a trade together that exceeds your risk level, it's going to tell you that. It will come up with an alert saying, hey, you're exceeding your parameters. A number of things that will keep you out of bad trades. So those are all things that are part of controlling that risk. But protection is number one, especially when you go into retirement. You have to protect what you have worked 30, 40 years for. When you're 65, 70, 75 years old, it's hard to go out and start a new career. So you want to make sure what you worked hard for stays with you and continues to grow for you during your retirement years.
Yeah, I'm really glad you brought that Click platform up because it's really helped people guide them through their investing decisions. I mean, having a plan, but then sticking to the rules with the to that plan. Really, like I was talking about, having the guardrails when you're bowling. I mean, there's something that's going to keep you out of the gutter. That's going to help you build confidence in your trading and investing. So, if you want to learn more about building more confidence in your trading and investing, it takes a little bit of action and learning the different techniques and skills that are needed to do stuff like that. And Al, there's one more leveraged asset that we talk about every week, and it's options. I
Hmm.
mean, think about this. When people have 401ks and IRAs, they're told to, like you talked about, to get in the market as quick as possible, but then they invest everything they have into the market. That's 100% at risk. Now, why are options such a great opportunity, especially like in retirement accounts, to use leverage, which basically means you're using portions of your capital
Right.
and protecting the remainder?
Yeah, options are full of options. I guess that's why they're called options. But it's a very misunderstood asset. Really, initially put together as a protective vehicle for these big firms that might have hundreds of millions of dollars on the line on individual investments. So options are something that we can use as individual traders and investors. It allows you to participate in something that might not be able to participate in if you were just looking at stock. Options are something that's traded on an underlying, could be traded on a stock, on an exchange traded fund. You can do options on futures and Forex. But let's just say that you were looking at a stock that maybe at one time when you first started looking at it, it was $9 or $10 a share. Now it's $300 a share. You're thinking, yeah, I should have bought it when it was 9. I can't afford to buy it now when it's 300. Well, there may be an option that allows you to participate in the movement of the shares for $9 or $10. I mean, there's a number of different options that you can put together. We certainly don't have time to go into all of them on this show, but we do talk more about them in these classes. And we have classes taught by people that are using options on a regular basis, some of whom maybe have worked on the Chicago Board of Options, for example. But the options can also be used as protection, like an insurance policy. So you can have that's another part of that risk management. You can protect your assets. You can participate with a smaller upfront amount, and also on the return side, options kind of has leverage there. So if you look at a rule of thumb, is if the underlying assets up about 10%, the option should be up about 100%. So that allows you to take a small amount. Let's say you're in retirement, as Josh mentioned, you don't want to take all of that retirement money you have and maybe putting that in a risk asset. You can take a small amount of it and still control a larger amount using a leverage like options. And then again, that return potential is very substantial. It allows you to identify what the absolute risk is. It can be set up with unlimited reward potential. Options can be used in moving markets where you don't have to decide on a direction. You can have a strategy that will benefit or potentially will benefit regardless of whether the underlying goes up, down, or sideways.
Yeah, and the key really is to be more capital efficient, protecting what you have. I mean, that's one of the key things that our sponsor, Online Trading Academy, really teaches is protecting your capital. Because if you
Exactly.
can't protect it, you can't grow it. And that's the key, is having the proper strategy, but also having something that guides you through that process, like that platform that's called Click, help guide you through your decision process. And Al, there's steps that people need to take in creating a plan, but it really comes down to doing something that they may haven't done in the past.
Sure.
And sometimes it can be, a little bit different going into an arena that you haven't been in before, but you have to start somewhere. Al, I want to continue this discussion about, I guess, retirement topics
Sure.
and techniques and strategies in this next and final segment. But I also want to talk about how to get started in the markets. We'll be right back.